Hello traders, and welcome to another weekly market forecast. Hopefully everybody has a great weekend. And here we go with a very interesting week. Entering in the next week, we're going to have FOMC on the May the 1st, and May the 3rd we have NFP. The market started to react, as we have been saying, in Forex, especially over the last week, and the indices. So we are going to go through each individual instrument one by one, starting with the dollar index as usual. So as far as we have a peak on the 16th of April over here, and it holds, the market should give us some consolidation opening the week over here, and then later on we will start turning to the downside for this move for the time being. Alternatively, there is a small chance if it makes a new high once again, a marginal new high, a small one over here, the market will still react to the downside within the week after Tuesday especially. So we are only biased to the downside for the dollar index for the next week ahead. For the dollar yen, we have got this move to the upside from Bank of Japan's interest rate decision and the meeting, because they haven't said anything different. Of course, they are not going to do that when most people expect that, as we have been saying to our members for a long time. So we haven't recommended anything anyway for our members. And what we can expect right now, because we have entered the Fibonacci extension area, over here at some moment we will get signs of weakness and the market will react to the downside as a corrective drop, which will be a decent drop. And this is going to be the bigger market direction move coming very soon. For our traders, again, this is not a recommendation. We have been trading other pairs other than Forex in these cases. The market is getting ready for some decent moves in the month of May. If you are interested to figure out what we are looking ahead, feel free to join us with the link in the description so we can give you more clarity and help you pick up better trading decisions. So, in summary, for the dollar yen, over here we will get some weakness signs coming very soon, and the market will react to the downside for around about 400 to 500 pips at least. Something decent like this one over here is going to be taking place very soon, so not worth to chase this one to the upside from now onwards. The euro has been reacting exactly as we have been expecting again for the last week or so. We have been saying from these areas that we have been expecting a turn to the upside to be taking place. So far the market has done that. At this stage we are in a process of a pullback. When this pullback will be completed, the market will give a big move to the upside. So the beginning of the week is going to be with a little bit correction over here to complete this structure before the next one will be taking place. Once again, if you want to learn when this will be ready and how to track this one, and if this is going to be a trade recommendation, join with the link in the description and make better decisions for your trading, because at the end of the day, it's one thing to be expecting something, it's a completely different thing to choose what you trade. This is two different things that most people, they don't understand, and this is why they are not successful in their trading. So feel free to check us out if you want to improve your trading decisions and know when and why you should be trading and how you should be looking to find value from the marketplace. For the pound, very similar to the euro dollar, it's just that the pound was a little bit weaker in this move to the downside over here. Right now the market is catching up with the move in the euro. Similar idea. We are expecting some consolidation correction over here to take place before the next reaction to the upside can take place for the pound as well. For the pound yen, similar to the dollar yen, we have got this push to the upside to break these highs. We have been mentioning these levels were critical in terms of the next structure. We have been saying that if they hold, then the market could react lower from here, which they didn't hold, so the market broke to the upside over here. So right now is going to give us a little bit more upside pullback and another push to the upside before it give us a reaction. So sometimes over here we are going to get a 3-swing pullback at least, where we can see another reaction later on. So at the moment this pair is not really worth for trading. It's just that a waiting time to see what it wants to do. The EURUSD, we have been saying about this drop over here from the last week after the bounce. Over here, we are still trading from the cycle from 5th of March 2024. So we are expecting more downside in the EURUSD, potentially opening up with a lower wick over here, bounce, and then continue to the downside again. So it will be retesting minimum the lows from the 2nd of January with a highly possibility and chance to break them later down the line. So for this pair, we are not interested in any buy setups. The market should continue to be under pressure and remain to the downside for the time being. For the SPX, S&P 500 cash index, we have been saying over the last week about the market to be giving us this move to the upside, which is taking place right now, as you can see. So everyone should be long from these areas over here. Otherwise, you shouldn't be involved because after this move to the upside, we are expecting another reaction. So overall, this market has the possibility to make all-time highs again over here before a reaction. However, the highest probabilities is to retest this area over here, 5,230-ish levels, before it can give a reaction, despite the possibilities of new highs. However, the viable trading was to buy from these lows over here. Otherwise, at the moment, it's not worth entering into the cycle in the middle. So this is what we teach to our traders as well, when to trade, when to enter, and when to wait, because this is very important. That can affect positively or negatively your risk to reward ratio and your efficiency as a trader. So if you want to become an efficient trader, again, you should consider becoming a member, because we teach and show stuff that you don't really find in many other places. So this will help you to improve your timing and entries in the market, and when to be waiting and not being trading. Now for gold we have been explaining about this structure, the three swing pullback over here into another extension area. We have also posted in our Telegram channel, which you can join it with the link in the description, to get updated with some updates and free content and announcements. So we have been explaining about this reaction to the downside and how the buyers have been buying from these levels again, for a good potential for all-time highs to be taking place once more. However, it's also possible that the market can retest these highs and fail from here. So the highest probability chance is to see, after a small consolidation over here, another push to the upside towards these highs over here. And then depending on the move we're gonna get within the week, it should determine whether we are going to all-time highs once again, or whether we will find signs of weakness. So regardless of the case, the buys should have been taking place from these levels over here. And right now it's a waiting game for gold to see how this week will play out. Again, with the most probable chance that it should be a break to the upside, with the dollar weakness coming ahead in the week. For oil, very shortly over here, we have been expecting a reaction from this extension area over here, which we have got the initial reaction lower. As far as we are below these levels over here, the 85-86 area, the market has a highest chance probabilities wise to drop to the downside. For at least the 76-75 levels over here, and then we'll see how the market will play out. In the bigger picture, we have been saying that oil should not be a bullish market. Overall, is still within the highs from 28th of December over here. So as far as we get a decent reaction to the downside over here, the market can give us a cycle to the downside, and then we will evaluate the situation once the market is down here towards these levels, if it wants to turn up once more to the upside again. For Bitcoin, we have been explaining this analysis from these levels over here. We have got a pullback towards another extension area over here. So the market has reacted to that, and now it's pulling back and accumulating for the next cycle to the upside, which should be taking place anytime starting from this week onwards. We should expect Bitcoin to make all-time highs once again before anything else can take place. So anybody who is long in crypto, you can remain long. The market is not ready for any major corrections as of yet. So over here, this is an accumulation phase for Bitcoin for the next move to the upside that should be taking place. And to conclude the video, we are going to go through two ETFs, the 3Qs and the GDX. So for the 3Qs, is very similar to what we have been saying in the SPX cash index. This was the buying opportunity over here. The market is reacting to the upside at the moment. Small consolidation is likely on Monday to begin the week with, and then the market should give us a push to the upside from Tuesday onwards. Perhaps this one should also retest these areas over here, these highs from the 11th, 12th of April over here. Or if it wants to, it can correct over here for another move to the upside and all-time highs once again. However, the highest probability chance is to retest these levels over here, 440 to 445 area over here. And for the GDX over here, the gold miners ETF, it's still bullish as we have been saying from the lows from the 28th of February. So this supports the view for higher metals as well. So we have got a 3-swing pullback over here with a reaction. So it should be some accumulation over here for another push to the upside towards the 37-38 area, which we are entering into an extension area over here that we can see reactions later down the line. But still it has a lot of room to go up over here before the reaction lower. So this means that most probably and ideally the metals should remain supported for another leg to the upside overall. So that was the weekend's forecast for the next week ahead, guys. Thank you so much for watching. If you are new here, consider subscribing, like the video and share it. If you have any questions, feel free to leave us a comment or send us an email at support@roiforecast.com. And of course, we will be happy to see you becoming a member as well, so we can help you to trade more efficiently and help you to improve your trading decisions. And we will see you in the next video sometimes within the midweek with another update. So until then, enjoy the rest of your weekend and we'll see you in the next video.